Assalamualaikum to Dr. Dahlia. We from Group C will present about personal financial and budgeting and consumer credit.
In this video, our group will touch on various things about personal financial and consumer credit, which is discover personal financial statement and budgeting and consumer credit, expose an important and current issue of consumer credit and personal financial statement and budgeting, cover the most recent data on personal finance and budgeting and consumer credit, a few extra topics like personal financial management and the risk of consumer credit. The main focus on personal finance is on accomplish individual financial goals, such as setting aside money from short-term needs, planning for retirement, and saving for a child college education. It basically depends on your income, expenses, living requirement, and personal goals.
Next is importance of managing personal financial statements and budgeting. First, one can understand his financial status better, which will influence them to make better decisions. Second, by having proper financial management, an individual can keep track of their expenses and will properly organize spendings and savings. Third, one can establish clear financial goals when they carefully plan for their strategy to achieve their goals. One also will awaken their desire to earn more, which increase their standard of living.
Current issue of managing personal financial statement and budgeting. Malaysian financial habits have hardly altered since last year. According to the Ringgit Plus Malaysian Financial Literacy Survey, just under half of those polled indicate they still spend exactly what they make or more, and just over half say they could not manage for more than 3 months on their saving if they lose their jobs. 70% of Malaysians believe their EPF will not be enough to cover their retirement needs. According to a poll, 45% had not begun retirement financial preparation. More than 60% of persons under the age of 35 are ignorant of debt restructuring and risk withdrawal option. The government stated in March that Malaysians' minimum monthly income will increase to 1,050 ringgit. Before the end of the year, the new minimum wage will be implemented gradually to solve any potential problems. Many suffering Malaysians are relieved by this news.
Figure above shows the annual growth of the general insurance industry from 2017 to 2026. The economy, which is predicted to increase by 5.5% in 2022 after contracting by 5.6% in 2020, is the main driver of the industry growth. According to the Malaysian Ministry of Finance, insurance expected to increase in 2022, which as motor insurance was expected to grow by 1.9%, driven by an extent in vehicle sales. Next, property insurance was expected to increase by 11.5% because of the strong pipeline of infrastructure, residential and utilities projects. Moreover, personal accidents and health insurance are expected to increase, although the cost of medications and service increase. Citizens will choose private insurance due to increased health awareness and a gap in public healthcare coverage. Life insurance is expected to keep on increase from 2021 to 2025 after decline in 2020 due to facilities that the government offer, which introduced the insurance or life and critical illness cover for low-income group.
I'm going to present about the tips for effectiveness managing personal financial statement and budgeting. Firstly, we should utilize automation to save money. We advise that we should automate our initial saving that we have classified for a different purpose. With automation, the money will be automatically set aside for our expenses with very little work on your part. Secondly is monitor your progress and schedule. It means that we can keep track of our activities and expenses daily, weekly, bi-weekly, and monthly. Tools for budgeting are available for our convenience. Thirdly is plans should be adjusted and re-evaluated as necessary. We must continue to change and emerge if our income, expenses, wants and needs are not stable. We must come to terms with what our budgeting process requires in order to produce a beautiful financial statement. Next is pick a budget strategy that works for us. It's important to select the one that best for our needs, wants, and ability. Besides that is determine our income after taxes. A person receives gross income after deducting additional costs like taxes, insurance premium, and liabilities. Therefore, it is important to compute net income for budgetary purposes in order to determine our actual income. Giving ourselves a true picture of our income will help us evaluate our budget plan effectively. Lastly is get debt free and keep it that way. To avoid getting into debt, we must avoid using credit card. Our stress will be decreased as we pay off debt and manage it effectively, giving your peace of mind.
Then, recommendations for managing personal financial statements and budgeting. First, read a few personal finance books. This will help them plan to track their flow of money. Second, adding financial literacy to education so that many people would be more aware of financial literacy. Third, make a priority list of the things that need to be prioritized first and where they need to spend their money.
A consumer credit strategy enables customers to borrow money or take loan and pay it back over time. When a client obtains credit, they can buy a product without having to pay in cash out before. A person with a good credit history has a track record of returning all of their debts on time and in full. A person with good credit will be able to borrow money more easily and on better terms in the future.
Next is the importance of consumer credits. First, it helps companies to have an essential access tool to do transactions efficiently. Second, consumers can buy the things they need on credit. Third, is able to meet for emergencies by paying in advance.
Current issue of consumer credit. There is an increasing migration of lower ratings to fair and good score in the iScore risk grades across age groups. This is demonstrated by comparing the current year 2022 to the previous year 2021 as well as to 2019, the year before the epidemic. Credit risk rating remained higher for age range 36-50 with 6% and 29% of those 51 and older receiving strong risk grades respectively in 2022. An average of 9.1% of Malaysians are 90 days overdue on their repayment and unsecured credit lines, credit cards and personal loans. Unsecured credit repayment are substantial in this group, accounting for 26.4% in 2022. This gain may have also been enabled by government initiatives such as loan moratorium, the 10,000 special withdrawal from the Employees Provident Fund, Bantuan Keluarga Malaysia Payments and Financial Management and Resilience Program (URUS) repayment helped secure by 2.7 million individuals borrowers in the second half of last year.
The figure above shows the data of consumer credit in Malaysia from December 1996 to September 2022. According to the graph above, the value average of consumer credit in Malaysia is 238.6 billion Malaysian ringgit, with a minimum of 56.74 billion Malaysian ringgit in December 1996 and the maximum in September 2022 of 452.89 billion Malaysian ringgit. According to the statistics information graph above, consumer credits in the year 2022 increased every month from February to September with a difference of 12.3%. Due to COVID-19 conduct economic downturn, consumers take actions to manage their credit portfolios. This has been also from government facilities and assistance during COVID-19, such as Bantuan Keluarga Malaysia Payments and Financial Management and Resilience Programs, repayment assistance and loan moratoriums. According to Experience Information Service Malaysia, the age group as consumer credit improved from 2019 till now. The great credit risk rate was matched age 36 to 50 because it implies a less than 1% default rate. This means only a few consumers that age take 90 days or longer to repay credit facility.
Now, I'm going to present about three types of consumer credit. Firstly is non-installment credit. It is depending on the business offering the credit. Non-business installment credit may be secured or unsecured. This credit has a single lump sum payment. Secondly is installment close-end credit, which is the consumer can obtain a certain amount of credit to buy one item or a number of items using installment closed-end credit. A car loan is one of example of closed and installment credit. To help the consumer purchase a car, the automaker extend credit. The last one is revolving open-end credit. It means that a consumer will typically find revolving open-end credit using a credit card. A certain amount of credit is available for the consumer, which they are free to use or not. The customer must then repay a part of credit they use at the end of the period, which is typically a month. If the credit provider does not close the account, the credit remains open. The credit is considered to be revolving because it typically does not close. Me again, I'm going to share about the guidelines for increasing your credit score. Firstly, pay off your loan quickly. By setting up automatic reminder, you can make sure your payments are made on time. Get current and maintain it if you have missed payment. Secondly, avoid reaching your credit limit. Try to keep your balances low in relation to your total credit limit because credit scoring models consider how close you are to being maxed out. Your credit score could be harmed if you close some credit card account and combine most of all your credit card debt into one card. It shows that significant portions of your available credit is being used by you. To get a good score, you don't have to constantly use credit card. Keeping the balance paid off each month will help you. Thirdly is long credit history will improve your rating. The principle of credit score is credit traits over time. There is more data available to assess whether you are a good credit recipient. The more experience your credit report proof is making on-time loan payment. Fourthly is apply for credit only when necessary. Credit scoring method think of your recent credit activity as a sign that you need credit. It might seem to lender that your financial situation has changed negatively if you apply for a lot of credit in a short period of time. Last but not least is check the fact in your credit report. Submit a trade if you find any possible error. Keep an eye on any old credit card account you may have that you are not currently using to make sure that someone that's trying to steal your identity is not utilizing them.
In conclusion, managing personal financial statement and budgeting is show us that controlling finance is important since it can help us save money for the future. We may also understand how management can help us become successful person by using this method. We must understand proper financial management. While for consumer credit, a firm or an individual must manage the cash and discover what they require. The priority must be on consumer debt because it increases consumption by increasing spending power. It must be paid in pace, which may have an influence on some financial individual or firm.
OMG, I'm so stressed about financial problem. I think I should ask my friend. They are financial advisor.
Hello Asma.
Hello Anisha, aku ni Afiq and Linda. May you guys help me?
Sure, what is it?
Is there any tips to use credit card wisely?
Alright, in my opinions, I think you should use your credit card for needs and not for your wants. Once you have a credit card, you should use it carefully. Frivolous purchases can lead to debt. For example, a credit card can use in emergency cases.
I want to add on, you should never skip a payment and stay under 30% of your total credit limit. Pay your bill every month even if the minimum payment is all you can afford. Missing a payment could result in a late fee, penalty, interest rate, and a negative impact to your credit score.
Oh, I see. What your best financial advice for young adult?
My advice for a person who is in their early 20s is educate yourself on personal finance. Once you have read a few personal finance books, you will understand the importance of two rules. Never let your expenses exceed your income and always keep your eye on where your money goes.
I think you can start savings for an emergency fund. One of the most repeated mantras in personal finance is save yourself first, which means saving money for emergencies and for your future.